Friends, I welcome you all to our today's session. Today, we are supposed to learn the concept of IGST, CGST, SGST, and UTGST. At a very basic level, we have already understood, we have got some idea that in which situation IGST will be levied and which situation CGST plus SGST is to be levied and which situation UTGST will be levied. All these things, you are having some idea at a very basic level. We'll understand what is that, what are these taxes, and let us see with the help of some examples how we are able to apply that knowledge in practical situation. So, going to share the screen with you right now. You already know that India, we are having a dual taxation system. Our GST structure is like this. Center will levy some tax, state will levy some tax. So both central and state have powers to levy taxes. So in fact, there are various kinds of GST structure. In India, we follow this structure, which you can see in the picture, the third column, you can see this is the dual GST. That means under this system, GST shall be levied by center as well as by state. Concurrently, it will be levied. You know that thing. And when we are saying dual GST structure is followed, so therefore, various GST laws are implemented. Already you have seen in the GST website that there are Central GST Act, various states have their specific GST acts are there, and the GST system is extended to the whole of India. You already know each state is having a GST Act. For example, state of Odisha is having Odisha GST Act, state of West Bengal is having West Bengal GST Act, state of Bihar is having Bihar GST Act, and there is a Central GST Act, and there is an integrated GST Act also. Union territories, they have Union Territory GST Act in their respective names. Like that, this is implemented. Okay, so this tax or GST, goods and services tax, is a liability on supply, and the supply can be intrastate supply. When you say intrastate supply, means supply is made within the state, from one place to another place within the state. It may be interstate sales also, or interstate supply also. When you say interstate sale, supply is made to outside states. Outside state means one or more states are involved in that. And whenever there is an intrastate supply, so these are the two taxes which will be levied. Can you read it out? What are the two taxes in case of intrastate supply?
Central goods and services tax, state goods and services tax.
Very good. And when the supply is made to outside state, or you can say interstate supplies, which GST will be levied?
Integrated goods and services.
Okay. So various acts, as I was talking you, even if there are various tax laws, various GST acts has been passed. Let me at this stage once again show you to. Let me take you to the GST website. Just a minute. Earlier, we have already visited to GST website. Now, once again, let me take you there. Yeah, are you able to see it?
Yes.
Now you see. Here you see there is a link GST law. If I click here, I can find out various, this is CBIC website. You can go there. You see the state specific laws are there. You can link here and find out. So let us say I'm going here, Odisha. I'm proceeding to a different website. You see, it will link to the Commissioner of Commercial Taxes and GST. Okay, and here you can find out our state level GST acts. Link is available here. Okay, will you be able to do that? Various things, GST Act is there, GST rule is there, GST audit is there, GST rates are there. Okay, if you click here, you can find out Odisha GST Act, Central GST Act, then Integrated GST Act, then GST compensation to the states act. So these acts are here, you can find it. Okay, friends, are you able to see it? Yes or no?
Yes, sir.
Yeah, thank you. So please keep on responding. Now, the concept here is that even if there are multiple acts like this, multiple legislations are like this, the basic features of the law, such as chargeability, is same, or various definition of taxable event, definition of taxable person, and the classification of goods and services, and the valuation mechanism, valuation methods. All of these things are uniform among all these acts. Okay, even if different acts are there, there is a lot of uniformity among them. Now, friends, earlier we have seen or already know that normally these are the three kinds of taxes we come across. One is central goods and services tax, then is our state goods and services tax, and integrated goods and services tax. And a different situation, different taxes like this are levied. So GST to be levied by the center on intrastate supply of goods and services, okay, is called as the central GST. That means when there is an intrastate goods and services, intrastate means within the state. When there is a within the state, there is a supply, then center will levy a tax that is called as CGST. Are you getting? And state is also going to levy a tax on an intrastate. First, we are talking about intrastate. In the intrastate situation, in the intrastate situation, center will levy a tax that is called as CGST, and state is also going to levy a tax that is called as SGST. Is it clear to you? And an interstate supply of services, IGST will be located. IGST will be collected by center. This concept you already know. In case of intra, there are two taxes. One will be levied by center, other part will be levied by state. The part of the tax which is levied by center, that is called as CGST, and the tax which is levied by state, that is called as SGST. And in case of interstate supply, tax will be levied by center, or you can say tax will be collected by the center, that will be called as IGST. And on import of goods and services, what will happen? IGST will be levied. IGST will be levied on import. Okay. GST is a consumption-based tax. That is, tax is received by the state in which goods and services are consumed. Okay, what is consumption-based tax? You see, so in our country, there are many states where goods are produced, and there are many states where goods are consumed. Okay, so most of the states, let us say Gujarat, Maharashtra, you can find a lot of producers in that area. And there are many states where you can find out a lot of consumers are there. So how ultimately the tax which is collected, how it is going to be distributed? GST is distributed on the basis of destination. Destination means government will see where finally the goods and services are consumed. For example, you are purchasing a computer which is produced in the state of Maharashtra. It is produced in Maharashtra. Okay, it may be coming through different states. And finally, let us say that is landed in the state of Odisha. Who is consuming? Goods are consumed. A consumer of Odisha is consuming. In which state it is consumed? It is consumed in the state of Odisha. So whatever GST, that will be taken by the consuming state or the state of Odisha. State of Maharashtra is not going to get anything. So that is the reason. In the previous class, some of you are asking that what is compensation. So that is the situation when it becomes a consumption-based tax. So it is the consuming states which will get the maximum share of GST. So because of that, producing states may suffer. The revenue collection may fall. If the revenue collection is falling down, center has committed, then it will be giving you some compensation, or they will be compensated to that extent. Are you getting? That is why it is called as consumption-based tax. Consumption-based tax means the consuming taxes will be getting the GST revenue. Now, friends, this system, this dual tax system, or the concept of IGST when it is levied, IGST is an interstate supply. Because of this IGST system, a seamless flow of input tax credit is assured. Input tax credit can be easily availed because of the concept of IGST. Because what will happen in case of interstate transaction, what happens? So if you have purchased something, you are supposed to take the credit on that. That is the concept of GST. Isn't it? So GST, how it is handled, you see, ultimately the supplier has to pay tax. Whatever he is collecting from the consumer, he has to pay that. Customer is paying to the supplier. Supplier has to deposit money with the government. Now, while depositing money with the government, supplier has to see how much input credit is available. Input credit available means when he has purchased some items or when he has availed some input services, he might have already paid GST on that. So that is his ITC or input tax credit. Suppose his liability on the supply is, let us say, 10,000 rupees, but his input tax credit is on 2,000 rupees. Then how much he has to pay in cash? How much? I told you his GST liability is 10,000 rupees. Input tax credit available is 2,000 rupees. How much he has to pay?
Sir, 8,000.
8,000 rupees he has to pay. And of course, you know, there are various components of GST. We have already seen that. Supplier might have to pay some CGST, might have to pay some SGST, might have to pay some IGST. Similarly, there will be ITC is also available. ITC may be available in the form of CGST, may be available in the form of IGST, may be available in the form of SGST. Okay. Right. Now, let us say we are having input tax credit. Why IGST is there? Because if you are having input tax credit on an interstate supply, then I don't have to deal with multiple states. I don't have to say that I have to deal with, let us say, Bihar government, I have to deal with West Bengal government, I have to deal with Tamil Nadu government, not necessary. Because whenever there is an interstate supply, my credit is already available under the head IGST. So on all interstate supplies, IGST is levied. So I have to deal only with center. I don't have to deal with various states. I'll be asking center that you see this much of credit is available in IGST, you have to pay me. As a state, one can ask that. Otherwise, difficulty will be that I have to ask all the states. You see, this much of credit is available from your state. This much of credit is available from your state. So one state has to deal with all the states. So because of this IGST, the credit flow becomes easy. Within the state, no issue. SGST credit is available. Okay. SGST is collected, that credit is available. But outside the state, you have to deal only with the center. That is why IGST is levied. So you can say because of this system of IGST, so the credit flow becomes easier. So IGST system ensures seamless flow of credit. Are you able to understand? Yes or no? Are you getting it or not? So in this system, what will happen? One state has to deal only with the central government, to settle the tax amount, and it will not have to deal with multiple states. So this process becomes easier. Okay. What is IGST? IGST is the GST which is levied on interstate transaction. And it is also tax which is levied on imports. On any imports, IGST will also be levied. So this is a tax which is collected by the central government. and it will be further distributed to states. So whenever a product or service moved from one state to another, IGST is levied. So IGST system is there to ensure that the state has to deal only with the union government and it did not have to deal with each other state governments. Is it clear to you why IGST system is there? Yes or no?
Sir, can you repeat it again? I couldn't get it.
I repeat it. Whenever there is an interstate supply, or whenever there is a movement of goods and supply from one state to another, or from one state to an union territory, or from union territory to one state, IGST will be levied. Number one. Second situation when IGST will be levied, that is whenever goods are imported. Imported means goods or services are coming from outside India. In that case also IGST is levied. The system of IGST is there in order to ensure that each state has to deal with only central government. Okay, and through this process, the availing ITC becomes easier. Availing ITC on IGST becomes easier. Understood the concept?
So is the central government have to collect the total tax, it was given that 18%, that example last time you have taken,
Yes,
that
yes.
18%.
18%. Yeah, most of the cases 18%.
Yeah,
it
like
depends
maybe
upon the, you see, rates will be different. We'll be learning it separately for different kind of products, different kind of services. But in most of the products, it is 18%.
so
Yeah.
if a product comes from Delhi to Odisha,
Yeah.
then central will collect it and then again distribute that, like 18% we have
Yes,
taken.
central will collect it and distribute.
Then what is the
So all IGST for throughout India, whenever there is an interstate transaction, all IGST amounts are collected by the central government. It is with central government. Okay. Are you getting it?
Yes, sir.
Excuse me, sir.
Yeah, please ask your question.
Sir, you told importing of goods and services, IGST is levied. Sir, then when custom duty is levied?
When?
Custom duty.
Okay, what is customs duty? We'll come to that. Custom duty is a separate thing. A part of the customs duty is still there. Okay, and first of all, I told you on import it is not there, but on as import IGST will be levied, but export GST is not there. Customs is a different kind of duty, and GST is a different kind of duty. Okay, so maybe after completing this thing, we'll be taking few classes, initial things about the customs duty. At that time, we'll understand. Okay, and your question is, what is customs duty? Whenever goods are imported, as well as whenever goods are exported, a custom duty is levied.
Yes, sir. You told me import also. So goods are imported via custom duty is levied, and even
Yes.
IGST is also levied.
Levied, yes.
Both.
Yes. Not all type of custom duty. You see, custom duty has got various categories, right? So some type of custom duties are not levied, some types of custom duties are levied. Okay. Are you getting me? Just like you see, we are finding out under GST, there are various categories. Okay. Similarly, under customs duty, we'll find out there is something called as the BCD or basic custom duty. There is something called as the countervailing duty, custom duty like this. Different kind of custom duties are there. So custom duty, don't think that it is only one type of duty. So there are few duties which may not be levied. There are few duties which may be levied. Okay, is it clear to you now? Now let us move to the next concept.
Sir, can you explain the IGST concept with an example, sir? IGST collection.
Sure. Example, shortly we'll be seeing the example. Just wait for a minute. First, understand that IGST is an interstate transaction. IGST is also on imports. right? For example, you can take an example. Suppose you see, you can read this from the slide. Ramesh is a manufacturer of Odisha who sold goods worth 10,000 to Suresh of Andhra Pradesh. Now tell me what tax will be levied? What kind of GST will be levied here?
IGST.
IGST will be levied. Okay, so let us assume GST rate is 18%. So the bill amount will be 10,000 rupees plus 1,800, so 11,800 will be the bill. Okay, so already we know that GST is a consumption-based tax. That means the state where goods are actually consumed will get the tax benefit. IGST is collected by center. Center will pay this 1,800 rupees to which government? Odisha government or Andhra government?
Andhra government.
Andhra government, because this is where goods are consumed, not by the manufacturing state. Now, one more kind of GST already you know is SGST. It is one of the two taxes which is levied on intrastate transaction. On intrastate transaction, you know there are two components. One component is SGST, other component is CGST. SGST is levied by a particular state when goods are purchased and sold within the state. State government collects that tax. State government is the sole claimer of that revenue that is directly goes to the state government's revenue. And what, for example, let us say Suresh from Cuttack sells some goods of Rakesh of Bhubaneswar. The tax, which tax will be levied here? Sold from Cuttack to Bhubaneswar. CGST, SGST, IGST.
The CGST and SGST.
SGST.
Yes. CGST plus SGST. Okay, or SGST here means OGST, that is Odisha GST. Okay, so 9% CGST and 9% SGST will be levied. Okay, CGST is levied on the intrastate transaction. SGST is levied on the intrastate transaction. And IGST is levied at the intrastate transactions. Okay, the central government levies CGST.
So can you repeat?
CGST is levied on intrastate transaction. SGST is levied on intrastate transaction. IGST is levied on intrastate transactions. Okay,
Sir.
understood? Now, once we see the complete example, everything will be clear to you. So this is example. Let us say Suresh sells a product to Rakesh in the same state, Odisha. Now, in this case, two taxes will be levied. One is CGST, other one is SGST. Assuming that CGST rate is 9%, SGST rate will also be 9%. Okay. And in case supply is made outside to the state, then total 18% rupees, 18% will be levied as IGST because that becomes interstate tax. Okay. And in case of just like state GSTs are there, in union territories, there are union territories GST. So UTGSTs will be collected by them. So whenever there is a supply within the union territory, then CGST plus UTGST will be levied. And whenever there is a supply, maybe from outside, from another state to union territory, or from one union territory to another union territory, in those kind of situations, IGST will be levied. Okay. Is it clear to you? Okay, there are some union territories where they are having their state legislature. So there is a provision to collect GST under the state legislature also. Okay. So these are the two states. One is Delhi, second is Puducherry. They have their own state legislature. So SGST will be applied. So they are just like states.
So if there will be like transaction between two union territories, then there will be UGST, sorry, SGST. But if be one, like within one union territory, it is happening like within one particular state as it is happening. If
Yeah.
it will be happening like that in the same way, it means there CGST plus UTGST.
Yes. Yes, exactly. You have understood rightly. We'll be seeing one detailed example after some time. At that time, everything will be clear. Right. Here you take an example. Let us see this example. A dealer in Odisha sold goods to a consumer in Odisha worth 10,000 rupees. As you already know, CGST 9%, SGST 9% will be charged, assuming that GST rate is 18%. Now, if the same dealer of Odisha sold goods to a dealer in West Bengal worth some amount, then entire 18% will be charged as what? As IGST. After this, you have understood. If you have already understood this, after this, your doubts are clear, then we'll see a complete example. Now, everything will be clear to you. Understood the concepts now? Now, you have to answer me. Each one of you try to respond as early as possible. Now, I'm showing you this example. Now, this is in fact, your active participation is required. Let us say there is transaction here. Let me show you. Here is a transaction. Here is a transaction means within Ladakh. What kind of tax will be levied here? Purchaser is from
SGST, if within the Ladakh.
What kind of taxes? Single tax or multiple tax?
So say multiple.
Multiple?
CGST and UGST both.
CGST and UTGST.
The UTGST, yeah.
Is an union territory, CGST plus UTGST. Is it clear? Now, second, I'm showing you. Let us say goods are coming from China to Ladakh. What will be levied? Which tax?
Sir, IGST and UTGST.
Which one?
Sir, is it China to Ladakh or Ladakh?
China to Ladakh. Look at the arrow. It is China to Ladakh. See that arrow sign? It is from China to Ladakh. Which taxes? Look at
IGST. IGST.
IGST.
IGST. There was one more answer. Someone is saying that it is IGST plus UTGST. Answer is no. It is only what? IGST. Only IGST. Now tell me this situation. China to Odisha. What will be levied? Which tax? China to Odisha.
So IGST.
Very good. IGST. Now, next example is, let us say, Odisha to Andhra Pradesh. Tell me.
IGST.
IGST. Okay. One state to another state, IGST. Now, next I'm giving you this example. Let us say, Odisha to Odisha.
CGST plus SGST.
CGST plus SGST. Fantastic. Now you are seeing all your answers are coming to be correct. Take this example. Odisha to Tamil Nadu. Now Odisha to Puducherry.
Sir, IGST plus UTGST.
IGST. Why plus?
Oh.
IGST. That's it. IGST. Outside the state means IGST. Okay, one state to union territory, IGST. Now Puducherry to Sri Lanka.
Sir, IGST plus UTGST.
So answer is coming is IGST to UTGST. Who can tell me? Is it right answer?
So only IGST.
Only IGST. Okay. Okay. You see, this is not an import. This is an export. And there is no GST on export. Are you getting? Are you getting it?
Yes, sir.
Yes, sir.
There will be no GST. Okay, good. Now you see, Tamil Nadu to Sri Lanka. Same situation. This is also export.
No GST.
No GST. Good. Now, Ladakh to Puducherry. One union territory to another union territory.
IGST.
So IGST plus UTGST.
No, why UTGST? GST means IGST. Only IGST. Now you see, if you look at here, whenever there is an IGST, so there is no other tax. IGST means only IGST. CGST plus SGST is there. CGST plus UTGST is also there. But when there is an IGST, there is an interstate supply or inter-union territory supply. Then there is no other tax except IGST. And when there is an export, there is no GST. And when there is an import, there is GST. There is IGST. Now I think this concept is clear to you.
Sir, can you repeat that last example at Ladakh, from Ladakh to Puducherry?
Ladakh to Puducherry. This is inter-union territory, from one union territory to another union territory. So the tax which will be levied here is IGST. This is just like interstate. In case of interstate supply, what we do? What tax we levy? IGST. So in case of inter-union territory also, you have to levy IGST. Is it clear to you?
Yes, sir.
Meaning, another way, simple way to understand here is that if I had shown you initially the bills, GST invoices you had seen, and you are seeing the suppliers GSTIN and the recipient GSTIN, you have already seen. If both of them starts with the same digit, the state code, let us say 2121, that means same state, so definitely it is CGST plus SGST. Or if it is union territory, instead of SGST, what will happen? CGST plus UTGST. But the moment they are finding that different, then it will be automatically IGST. And in case of imports, codes will not be there. Suppliers code may not be there. So still it will be IGST. And case of export, exempted goods, no GST. This is what you have to remember. You can create a computer program also. Accordingly, bill will compute that in which case IGST will be levied, in which case CGST can be levied, in which case SGST can be levied, in which case UTGST can be levied. One can do a program on that. Understood, friends? Is it clear up to this? I'll once again try to explain you. Don't worry. This time, once again, let me repeating the situation. Now, this time, all of you, please interact. Ladakh to Ladakh, quickly tell me.
Sir, CGST and UTGST.
Very good, CGST and UTGST. Next is China to Ladakh. Quick, China to Ladakh. Which one?
IGST.
IGST. Okay, China to Odisha.
IGST.
IGST. Okay, Odisha to Andhra Pradesh.
Sir, IGST. IGST.
IGST. Very good, all of you are correct. Odisha to Odisha.
CGST plus SGST.
CGST plus SGST. Fantastic. Okay. And then Odisha to Puducherry.
Sir, IGST.
IGST. Good. Okay. Puducherry to Sri Lanka.
Sir, no GST.
No GST.
No.
Okay. Tamil Nadu to Sri Lanka.
No GST.
Very good. Leh to Ladakh to Puducherry.
IGST.
IGST. Fantastic. Now you have understood the concept. Puducherry to Karnataka. Puducherry to Karnataka.
IGST.
IGST. Good. IGST. Fantastic. That's it. That's it. Now again, we'll see it in a different way. You see, this is a table. Second column talks about the supplier state, supplier, and the third column is about receiver. You have to tell me which GST will be levied. Okay, you have to tell me which GST will be levied. Okay, Now, first case you tell me supplier is state, receiver is the same state. Which is
CGST plus SGST.
CGST plus SGST.
second? Supplier is a state, receiver is another state.
IGST.
IGST.
Good. Supplier is a state, receiver is an union territory.
Sir, IGST.
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 IGST. Supplier is a state, receiver is a foreign territory.
No
IGST.
GST.
No
Supplier is a
GST.
state,
No
receiver
GST.
is a foreign territory. No GST. Zero rated. Okay. Supplier is an union territory and recipient is an same union territory.
CGST.
UTGST.
CGST plus UTGST. Okay. Supplier union territory, receiver another union territory.
IGST. IGST.
Supplier union territory, receiver state.
IGST.
IGST. Supplier union territory, receiver foreign territory.
No
No
GST.
GST.
No GST. Good. Good. Supplier foreign territory, receiver state.
IGST.
IGST.
Supplier foreign territory, receiver union territory.
IGST.
IGST.
Fantastic. Okay. Now I think you are feeling comfortable. You'll be able to decide in which case CGST, which case SGST, which case UTGST, which case IGST will be levied. Yes or no? Are you feeling comfortable? Now, right? So again, one more picture I am showing you. This will again further clarify your understanding. Look at here. Minutely observe here. Within the state, CGST, SGST. Look at here. Within the state, CGST, SGST. Okay. In a different state also, CGST plus SGST. From one state to another state, IGST. One state to union territory, IGST. Within the union territory, CGST plus UTGST. Foreign territory to union territory, IGST. Foreign territory to state, IGST. That's it. Okay, here you see IGST, 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 IGST. But within that, this dual taxes are. Now understood the tax system in our country? GST, which type of GST will be levied in which situation? Are you getting it? Yes or no?
Yes, sir.
Yes, sir.
Good. Now, one more item is there. After this, is it clear? Is it clear? Now you'll be able to decide if this is the bill amount, which kind of taxes will be levied. I think you'll be able to decide. Okay, and this is important because whenever a dealer or a supplier is making a supply, you need to know what is his liability, what tax he has to pay. And this for every bill, amount will be different. And amount means the tax amount will be different. So each bill we need to know how much is my GST liability, how much is my out of that, how much is my IGST liability, how much is my SGST liability, how much is my UTGST liability, and how much is my, let us say, CGST liability. All these things from each bill. Okay, in fact, for every bill, any business house on monthly basis need a summary report. You can find out what is my bill number. Bill wise, you can have a list. Okay, what is my basic value or base value? Then what is my liability on IGST, CGST, SGST? That detail every month one should have, so that one can totally you can collect this is my liability, IGST and the CGST and the SGST. Okay, so in a business you have to create a MIS so that you will be able to get this much of information. Okay, as an auditor, you can also verify that what is the bill register, bill book, that this is the total bills and this is the GST liability, whether it has been paid or not. But how this is your liability, this has to be paid. But while paying this thing, You have to again maintain similar things. You must have maintained on purchases or inputs. So I'll show you here. Let us say on purchases or inputs. When you are purchasing something or availing some input services, you are paying money. Is it not? Let us say you purchase a computer worth 1 lakh rupees. But when you purchase, let us say you purchase from the same state. So you paid 1 lakh rupees plus you paid GST of 80,000 rupees. So when you purchase that thing, you got an input credit of 900 CGST, 900 SGST. Is it not? So first I arrive at on my sales or my supply, this is my liability. Then next thing also I need to know what is my input credit. Suppose my input credit is X. Then how much I will be paying? I will be paying the net amount. Because this is my liability and supply. This is the input credit available with me. Then I'll find out the net. And there is a possibility of adjustment. IGST can be adjusted, SGST and GST also. That adjustment things I'll be telling you in a separate class how this can be adjusted. So first of all, broadly, one has to make adjustment like this. Adjustment is set up its liability with the assets. Assets means whenever you are purchasing something, you can create an asset. You got an input tax credit. So detail of the supply and detail of inputs needs to be maintained. And practically how it happens, supply control is with you. You have got sale bill. Purchases also, whenever you are purchasing, you are making entry in the accounts. In addition to that, this can also be verified from the GST's website. Okay, you can at any point of time, you can see there is a particular return. I will be showing you later. Okay, that is called as popularity, that is called as the GST 2B. You can find out the person who has supplied you, he must have filed his GST return. He has sold because for him it is sold. Is it not? He is selling. When he has sold, he must have filed the return that to this party he has sold. Accordingly, when that is sold, yes, GST number is there, that will be reflected in your account as your purchase. So by visiting GST site also, you can find out how much amount you have purchased and what is the input credit available with you. Okay, you can cross check from your account. You can cross check this much money you have purchased and this much of input credit is available in GSTR 2B. That is called as GSTR 2B. Don't worry, I will be showing you separately. But just understand the system now. This is how records needs to be maintained. At the time of making payment, I will be finding out what is my liability and what is the adjustment that has to be made and how it has to be paid. I will try to show you this process maybe in the next class how practically adjustment happens. Now, today one more concept we need to learn. That is about what is compensation cess. You already know that. Still the theoretical things, let me explain you. What is compensation cess? Okay, compensation cess is levied under an act which is called as Goods and Services Compensation to States Cess Act 2017. And this is levied, as you know, not on all goods, but on some specific goods like luxury items and demerit goods. Okay, right? Demerit goods means maybe on pan masala, tobacco, aerated waters, on some motor cars. Motor cars is a luxury item like this. On certain items, this cess is levied. Compensation cess is leviable on intrastate supplies and on interstate supplies also. The intention of this levy is to provide compensation to the states for the loss of revenue arising on account of implementation of GST. Because GST we have already shifted to a destination-based tax. So the producing states may lose. So consuming states may gain. So since the producing states may lose, the revenue may suffer. This system provides a compensation benefit to them. That is collected through compensation cess. Okay, right. So this is implemented to address the possible revenue losses suffered by the manufacturing states. So for some temporary period, for past 5 years, initially it has been decided that compensation can, those states who are suffering, they can be compensated. Okay. There are some exceptions to that. Compensation cess is applicable to all taxpayers, except export of some specific notified goods, and except those who has opted for GST composition scheme. We'll be learning that thing. What is that composition scheme? Except these things, all are liable to remit GST compensation cess to the central government. It will be paid to the GST central government. ITC can also be claimed on GST cess paid during the purchase of notified goods. Right. ITC claimed on such cases can only be utilized for paying GST cess, but not for CGST, SGST, and IGST. That means credit on compensation cess can be utilized only for paying compensation cess only. It cannot be used for paying GST. So this utilization concept, anyway, we are going to learn separately in a different class, that how there is a possibility of set off among different kind of GSTs and compensation cess. Today, we are not going to learn that. I think today, what you have understood is that in which situation or in what type of supply, what type of GST is to be levied. That was our intention. And that was our objective, learning objective today. And one more thing, what is compensation cess? I think you have understood. Is it clear to you?
Yes, sir.
Okay. So we'll close our session here today. Thank you very much. We'll catch up in the next session again.
Excuse me, sir.
Yeah, please ask your query.
Sir, actually, till now, only 4 classes of indirect tax law has been taken, but in AIS and